to Navigation Trading Live. You are now part of a growing group of do-it-yourself traders who are trying to change the way investors think about building wealth. But because we don't believe in using financial advisors, stock tips, or traditional financial media, we have to do things different. We have to do things smarter. We do that through an art and a science we call trade hacking. At Navigation Trading, our methodology is based on statistics and probabilities, not hype or emotion. Our core strategies have been used by market makers, hedge funds, and floor traders for many years. Now, we share these secrets with you. Whether your goal is to make an extra $1,000 per month or replace your current income, with our guidance, you can achieve financial success beyond your wildest dreams. So, let's get started. What's up, everybody? It is Monday, August 14th. The markets are about to open here in a few minutes. Welcome to Navigation Trading Live. I am back home with my regular technology, and so hopefully this is coming through a little bit better than last week, but we were still able to do that. Love traveling, love being able to trade while I travel on a laptop, but it's also good to be home and good to have my normal technology and workstation to trade from as well. So if you haven't already, make sure you connect with us on Facebook and YouTube so you stay up to date on all the stuff that we've got going on. And let's go ahead and jump in. And remember that Navigation Trading Live, this broadcast is all about you. So if you have any questions, or if you have any topics, or if you have any trade strategies that you want me to dive deeper on, send me an email and we'll do our best to try to use it in the broadcast, in future broadcasts, so that we can answer your questions live. So what I want to talk about today is I've been talking about this strategy backtester that I've been using. And we're going to look at an example of FXI once we go to the platform. But I want to talk about backtesting and make sure that you understand that it's not the holy grail of trading. In other words, you can always find some strategy that performed exceptionally well over the last several years. But that doesn't mean that it's going to consistently perform the same way in the next several years. So you've got to be really careful that you're not what's called curve fitting, that you're not curve fitting your back test and just looking for strategies that happen to perform well. It's kind of like if you said, okay, I'm going to look at selling puts in SPY over the last few years. Well, if you run that back test, of course it's going to look unbelievable. Guess why? Well, it's because the market went up. Just kept going up and up and up over the last few years, right? So of course a bullish strategy like selling puts would have dominated from a performance standpoint. But that doesn't mean the market's going to keep going up for the next few years, right? So we've got to be really careful about how we use the back tester and make sure you're using it in a smart way. The great thing about it and the way that we trade at Navigation Trading is a lot of our core positions are that delta neutral, income producing. And so being able to play within the pricing models of the options models and being able to play within the parameters of the probability of success that you can generate on the platform, I think it makes it a very effective tool to help us figure out different trades to take. Now, one other limitation that it currently has is there's no filter for implied volatility rank or implied volatility percentile. I've been working with the developers and in conversations with them about getting that. And there's the opening bell. We'll go to the platform here in a second. I've been working with them and had conversations with them, and the IV percentile and IV rank filter are coming, but they're not here yet. So that's going to be a huge bonus once we have access to the capabilities to use that as a filter as well. So let's go to the platform and we'll go through the markets, and then we'll take a look at FXI, which is one that we did a strategy back test on, as well as we'll use this for our trade of the week. So let's take a look at what's going on. So we've got the markets are up, stocks are up. Apparently that scare of North Korea is nothing to the markets. So you can see we had that huge down day last Thursday, and then Friday popped back up a little bit, and today it's continuing to move higher. So we'll see if that was just a little blip on the radar, or if this thing is just pushing higher and then it's going to turn around and roll over. That's if I had and I don't make predictions on markets, and I think people who do are kind of shady, but especially if they're trying to sell you something based on their predictions. But if I had to guess, my thoughts is that you don't just have a day like that and then it just cranks back up to new highs. Well, I shouldn't say it doesn't, because it did that exact thing here. But what I'm looking for is some continuation to the downside. And maybe that's wishful thinking, because downside in the markets create opportunity with higher implied volatility. But I just think this thing is due to have some downside. And so I think it's pushing back up right now, and it's going to look to potentially roll back over and break the lows of Thursday. And then how much lower it goes from there, who knows? But that's kind of my thought process right now. We'll see if it plays out. So all stocks are up. You can see the bonds and notes are down a little bit. VIX is getting crushed. Volatility is getting crushed with the market up like it is. Oil pretty flat. Gold down a little bit. Natural gas pretty flat. The grains on the move again. All the grains down about around a percentage point. Soybeans, corn, wheat. And then we've got some of the international indices. The Mexican ETF is up about 1%. FXI up a little bit. The Euro FXE is down about a third of 1%. EEM, the emerging markets, up 1%. EFA up. EWZ, the Brazilian index, down a little bit. And you can see XLK getting a little pop to the upside. And XOP, which is the oil and gas ETF, pretty flat there. XLF Financials up. And you can see some of the other currencies are down a little bit. So let's go to FXI and take a look at what's going on here. So implied volatility, the percentile get up to 63, and actually a little bit higher on Thursday before flattening out. And then today, with the volatility getting crushed pretty much across the board because of stocks being up, you can see we've got a decline now in the implied volatility, but still above that 50 level, right? We want to sell premium when the IV percentile or IV rank is above 50, and we've still got it above 63 here, meaning that the price of the options is still at a good price to sell premium. So what we would look at here is, so price is about $42. So with this type of vehicle, I would look to trade a short strangle. And the reason being, and the reason I wouldn't do an iron condor, is because you just don't get enough bang for your buck. With a $42 ETF or stock, there's just not enough premium in those options to warrant buying those wings and defining your risk. So on these smaller priced symbols, that's where I really like to do the undefined risk, and it allows you to get a higher probability of success, as well as they're easier to adjust, easier to manage, and you have less transaction costs. But if you are trading in an IRA, or you just absolutely can't stand the thought of doing undefined risk yet, then you can define your risk by buying the wings. But let's take a look at what we do. So on the call side, look at about the 15 to 21 delta. So I would choose the 21 delta, right click, sell, strangle. And then on the put side, same thing, around the 20 delta. So you've got the 40 put, and getting about a 56-cent credit there. So if we analyze that, and let's take this one off here. So if we analyze that and set our slices to break even, 9/16, that's the expiration date. So we're looking at over 63% initial probability of profit. Obviously, the way that we manage trades and adjust them, our winning percentage is going to be much higher than that. So that's what the trade would look like. And think about this: if you're nervous about undefined risk, I mean, and if you look at this is one contract. So I mean, let's say it had a huge move outside of this gray box, which is the one standard deviation move. Let's say FXI just plummeted and went down to 37. I mean, you're looking at less than a $250 loss at expiration if you look at the green line. So it's not like you're risking a whole bunch by doing undefined risk. You just got to stay within the size parameters that fits your account size. Okay, so this will be our trade of the week. I'll try to get this filled and shoot it out to alert subscribers once I get filled. But I also want to show the back test of this before we end the broadcast here today. So if we take a look at the strategy back tester, I already prepared this, already had it ran. And what I did is I sold the 20 delta calls and 20 delta puts, which is exactly what we just put the trade in at. And look at the winning percentage. You got 29 wins, 3 losses, over 90% win percentage, and that's managing at 40% of max profit. So we like to manage these kind of 40 to 50% of max profit. On the lower price symbols, I typically tend to err more towards the 40% than I do the 50%. Just seen better win rates and better profitability that way over the years. So you can see the average win 296, average loss 955, total gross gain over that period, and this is over a 3-year period, 8,500 versus losses of 28. So nice win rate, nice profitability over time with this trading strategy. And so that's what this backtester helps you do. It helps you, if you have a strategy that you want to put on, it helps you get an idea if this has been profitable over the last few years. Now, what I already mentioned is, remember, this doesn't even filter for implied volatility rank or implied volatility percentile. This is putting on strangles in FXI with 45 days to expiration consistently. You just keep on putting it on. And so it's not even taken into consideration high IV or low IV. So you got to imagine that the statistics and the profitability and the win percentage is even better when you're taking only the high IV trades in this market. So hope that was helpful. And like I said, I'm gonna go ahead and try to get this filled. I'll shoot it out to Navigation Alert subscribers. If you haven't tried the 2-week trial for Navigation Alerts, we're still doing that for $7 for 2 weeks. So if you're interested, check that out. Have a great week of trading, and we'll talk to you next week.